Here's a crypto story for you that you haven't heard. A former JPMorgan executive who literally invented credit default swaps walked away from Wall Street to rebuild finance from the outside. Another guy, a co-founder of one of crypto's largest liquidity providers, left trading to do the same. Together, they spent a decade quietly building something insane that Goldman Sachs, BlackRock, JPMorgan, and the DTCC, the clearinghouse that processes every single stock trade in America, so they're all now running on in production. The token of the project that I'm talking about has only been publicly tradable since November 2025 and is almost entirely absent from retail crypto conversation. That is Canton Network that I'm speaking of. Today, we break down the origin story, the technology Wall Street actually chose, the tokenomics, the real risks, and the exact math on how many CC tokens you would need to retire as a millionaire in 3 distinct scenarios. Let's get into Canton. This is not financial advice, always do your own research. In 2014, every major bank started experimenting with blockchain. They all hit the same wall though. Public chains make every transaction visible to every participant. For a retail DEX, that is fine. But if Goldman Sachs wanted to settle a bond trade, that would be a regulatory nightmare. You cannot put $1 trillion repo book on a chain where your competitors read every position in real time. Well, Yuval Ruse and Eric Saraniecki saw that problem clearly. Ruse had run an algorithmic trading desk at DRW. Saraniecki had co-founded Cumberland Mining, which grew into one of crypto's largest liquidity providers. In 2014, they co-founded Digital Asset with one core thesis: build blockchain that works for regulated markets, not in spite of them. Then another figure, Blythe Masters, the former JPMorgan executive who invented the credit default swap, joined as CEO in 2015 and spent 4 years opening every institutional door in finance. When she stepped down eventually in 2018, Yuval Ruse took the helm and doubled down on 2 core innovations. DAML, that's the smart contract language built specifically for financial contracts, and 2, the network that would actually run it. And so, Canton Network launched in May 2023, backed by over 30 institutions. Later on, Global Synchronizer Mainnet and Canton Coin went live in July 2024. Public token trading opened November 10th, 2025. The core design of Canton is to be the network of networks. Each institution keeps its own private ledger but connects through a shared synchronization layer. Cryptographic privacy ensures each party sees only what they're supposed to see. Today, Canton Coin, or CC in short, trades at approximately 15 cents with a market cap around 5.8 billion, ranked 17th on CoinMarketCap. Only 7 spots to get to the top 10, yet it's been largely neglected. And today, we're going to fix that. First major aspect, the tokenomics. Canton Coin launched with a true fair launch. No pre-mine, no pre-sale, no VC cliff. Every CC in existence was earned as a reward for utility. That's genuinely rare. Maximum mineable supply over Canton's first 10 years is capped at 100 billion tokens, and after that, 2.5 billion per year continues rewarding participants. Today, roughly 38.5 billion CC are in circulation, so we still have some way to go to the 100, and I'll tell you why that's important in just a second. The key mechanic is the burn mint equilibrium. All transaction fees on the global synchronizer are burned permanently, while fresh tokens are minted roughly every 10 minutes to pay validators and app builders, of course. As on-chain activity grows, burns accelerate, and that pushes net issuance towards zero or even deflationary territory. The main risk I see here is the following. With 38.5 billion circulating and up to 100 billion eventually mineable, that's a lot of future supply. The burn has to keep pace, and that only happens if the trillions flowing through Canton start generating real fee volume at scale. That is not a small if. Let's move on to an aspect where Canton actually separates itself completely from the rest, and that is ecosystem growth. Here's the list. Number 1, the distributed ledger repo platform of Broadridge processes $362 billion in average daily repo volume on Canton. That's the world's largest institutional platform for settling tokenized real assets. Then we've got the DTCC, which clears every stock trade in America, selecting Canton as its tokenization partner following SEC no auction relief in December 2025. The platform will basically enable firms to issue digital versions of Russell 1000 stocks and US Treasuries and the likes. That's pretty big. And just lately, in April, Grayscale Research named Canton one of 6 blockchain protocols best positioned for what it calls a multi-phase, multi-trillion-dollar tokenization opportunity, putting Canton in the same sentence as Ethereum and Solana for institutional analysts. Goldman Sachs built its digital asset platform for bond issuance on Canton. Then HSBC completed a tokenized deposit pilot on Canton again in April of this year. And 6, I don't have enough fingers here, through the Layer 0 integration finalized in March 2026, Canton tokenized assets can now route across 165 public blockchains while staying compliant. Overall, more than $8 trillion in real-world assets flows through the network every single month, and that number is already larger than most blockchains will ever see in their lifetime. Every investment has its risks, as you know, and now I want to be honest, transparent about the risks around Canton. First is the emission schedule. That is one risk that we already mentioned, of course. But unlike crypto projects that are typical for the industry, with VC unlocked cliffs, Canton's emissions go directly to validators and builders actively running the network. And the burn mechanism eats into that supply every single time a transaction actually settles. The more Wall Street uses it, the faster it burns. That is not exactly too bad, we just need to be aware of it, let's say so. Second risk is that the bigger one, and it's timing. The DTCC platform goes fully live in October 2026, but institutions move on their own schedule. Announcements are not revenue per se. Until we see tokenized treasuries and equities generating real settlement fees at scale, part of this thesis remains simply forward-looking. And the final, to say, risk. Canton will never go viral, guys. There's no farming loop, no meme, no retail hype. It's like this token just rises with institutional adoption and not with memes. For some investors, that's actually the most attractive thing about it, but for others, I recognize that such kind of patience or waiting is just not justified, so just keep that in mind. Now let's get to the most interesting part, and that is answering the question, how many CC tokens would we need to retire as millionaires? We will get to it shortly, but first, let's quickly see the price history on CC and how it has been behaving lately. Canton launched in November 2025, and the price stabilized and found its bottom at around 6 cents. I remind you that. After that, it almost ran to 20 cents in less than just, 2 months? Since then, it has retraced, understandably of course, and is mostly in consolidation. Right now, a single token trades at 15 cents, and that's not too far from the all-time high, of course, and that will be our reference price for the Millionaire math today. The first of 3 scenarios is the bear case with 50 cents per token. 3.3x return from today, with market cap going to around $20 billion. To hit the $1 million mark at 50 cents, you would need 2 million coins costing roughly $300,000. Yep, it's a conservative scenario that will take serious capital commitment, I admit, but still it's worth looking at. Then we go to the base case with CC reaching $1.50, a 10x return on investment to bring us a market cap of around $60 billion. Such a market cap would make CC comparable, very much so, to mid-tier fintech infrastructure companies today. get around 667,000 tokens today for about $107,000 and just enjoy this solid risk to reward if, of course, the October launch delivers. Here comes the cherry on top, guys. The bull case that reads the massive $5 per token. An incredible 33x secured by Canton, becoming the default settlement layer for tokenized securities globally. Market cap shoots up to around $192 billion, still below what Visa trades at today, for a network potentially settling more daily volume. Potentially being a key word, of course. The amount of tokens you would need is 200,000, coming at a total price of about $30,000. No complaints there whatsoever. But some catalysts will be required to bring CC to these prices, and I've identified a few. The DTCC platform launch in October 2026 is the single biggest near-term catalyst. Then, the Layer 0 integration means Canton tokenized assets now flow to 165 other chains. And what if stablecoin liquidity from external networks actually funds primary RWA purchases on Canton, thereby creating network effects in both directions? The third catalyst is WLFI's USD1 stablecoin deploying on Canton. What it means is that it adds a payment layer on top of the settlement layer, a $2 billion stablecoin backed by short-term treasuries on a chain which is already settling treasuries to begin with. That closes a powerful loop, in my opinion. And Protocol 3.5, rolling out now, introduces zero downtime upgrades, meaning Canton's core protocol can be updated without pausing transaction processing. For institutions running trillion-dollar flows, that is non-negotiable infrastructure reliability, guys. Also, on the side of technical analysis, we see Canton has broken above the bull flag, meaning it is now more likely to continue making higher highs. These are plenty of catalysts lining up pretty well for Canton's potential success. And to conclude, I'll say that every other blockchain is trying to attract institutions with speed benchmarks or token incentives and such, whereas Canton went another direction. It let institutions actually build the network themselves, and that pretty much answers the question whether institutional finance is actually getting into crypto, moving on chain. Alright guys, let me know what you think of Canton and drop your price targets in the comment section as well, so that we can compare our expectations of this seemingly promising project. If you enjoyed my take on Canton, then please consider liking this video and subscribing to the airdrops.com channel, as it would really help me and the channel grow. Now, I want to thank you for watching and welcome you next time. See ya.